Hello friends, welcome back. So in the previous lessons, we already completed the chapter 1, that is external financial reporting decision from part 1, and today we are moving into second chapter, that is planning, budgeting and forecasting. In this specific discussion, we are going to discuss about a strategic planning or a foundation for strategic planning. Just think about a company, any company which doesn't have a proper mission or a destination, and it doesn't know where it is standing now. This is just and there is no proper budget and planning. How this business is there any chance this business is growing? The answer is absolutely no, because to grow a business there should be a proper destination has to be set. Right now I am here and I want to be here. This is my destination, or this is my vision in terms of business. This is applicable in our career as well. In our career, first we have to set a mission or vision or the destination where we want to go, and based on that destination we have to develop a strategic planning and the action plan for day-to-day activities. Then only we can grow and to become on that destination. So let's back to business. So there should be a proper vision and mission. So what is vision and mission? Vision. Suppose a Solaris Tech, a US based firm specializing in renewable energy solution. So their vision, for an example, to see a solar panel on every roof of North America by 2040. This is their vision. Vision means it's long term. When it's compared to mission, mission is for a short term plan and or short term objective, and mission is the long term objectives. So the reality, they currently hold only 2% of market share and face stiff competition. Now the gap, their 5-year goal requires 500 million in revenue, but current trend project only 300 million. So this is the gap. So once you understand this scenario, you can figure out how I can fill this gap. So there is a gap. My revenue goal is it is 500 million, and right now I have a plan only for 300 million. So there is a gap. This gap I have to fill. How I have to fill that? You have to plan and develop a new strategy. So let's move deeply into vision and mission. First, start with a mission statement. Mission statement is a formal summary of the aims and value of a company. It defines the organization purpose, its customers and its current operation, and it answers why do we exist today. Mission is a short term or medium term objectives and what we have to achieve in short term or medium term, that normally we will mention as our mission statement. And the vision statement, vision is an aspirational description of what our organization would like to achieve or accomplish in the mid-term or long-term future. It answers what we want to become. The mission statement answers why do we exist today, or what is our short-term or medium-term objectives. When it comes to mission statement, what do we want to become, or what is our long-term objectives. So here is a clear comparison between mission statement and vision statement. The focus of mission statement is current operation and purpose. The focus of vision statement is future aspiration and goals. The mission statement question, what do we do for whom? And the vision statement which answer what we look like in next 10 years or 20 years or in even 30 years. The functions, mission statement guide us daily decision making, and the vision statement which inspire and provide direction. Then the stability. The mission statement comparatively stable, but it can evolve based on if the situation got change, based on that it can change or it can evolve. And the long term, the vision statement and which change very rarely only. Once we set a vision statement, it doesn't change It will change very rarely. This is about mission and vision statement. So let's move into strategic goal and objectives. Once you set a vision and mission, and what you have to do? You have to set actionable or strategic goal to achieve that mission and vision. Suppose one of our strategic goal can be increase market share, or increase the market share, or increase the expanding to global market. This all can be our strategic goals. Or tactical objectives like open 5 new branches in a particular location, or expand into business into a new product scenario. All this can be some tactical objectives. So for these objectives, there should be, for these strategic goals and objectives, to be more effective, it should be SMART. That means our objectives should be specific, measurable, attainable, relevant and time bound. It should be specific. You have to specify what is your exact objectives, and it should be measurable in terms of numbers. What you have to achieve, that has to be measurable, and it should be attainable. It should be achievable also, and it is relevant for your mission and vision, and it should be time bound. This is we can apply in our professional lives also, or in our career also. Once we set a goal, it should be SMART. SMART means it should be specific, it should be measurable, it should be attainable, relevant and time bound. This is a features of an effective goal. Now let's move into next concept, that is performance gap. So what is performance gap? We set a target here and now we are here. So this is our performance gap, or it is the difference between, or the gap between our desired objectives and our actual performance, or our projected performance. The performance gap analysis, where we are now. First, to do performance analysis, first we have to understand where we are now. Okay, you said you want to achieve the market share, or you want to increase the market share by into 10% by next year, and first you have to see where is your current position, where you want to be. Then that is your strategic goal. What is your goal? And once you analyze these two things, where you want to become and what is your current position, and now you understand the gap, and now you have to analyze how you can fill this gap. Now you understand that there is a gap between my goal and my actual result, or my accepted performance. So to fill this gap, you have to do a study or an action plan, or you have to allocate more resources to fill this gap. So how normally we are filling this gap? First thing, there will be some internal strategies and external strategies. Internal growth. Suppose now your sales target is 500 million. Your sales target is 500 million, and right now you are at 350 million. So there is a 150 million gap. So how you are going to fill this gap? Suppose maybe you can introduce a new product, or new product development, or a new quality product. It's up to you. It's you have to decide how you are to fill. So there are some internal opportunities are there, like internal growth. Then you have another opportunity, that is external growth. External growth means suppose you are acquiring a competitor. Suppose you have a sale of 350 million and your competitor have 150 million. So you can if you can acquire that competitor, your objectives will be achieved. That means you have to sell, or your sale has to become 500 million. That is your objectives. To achieve that, there are some external opportunities also there, like mergers, acquisition. Then the disinvestors. Suppose there are some non-performing department in the current organization. Suppose your objective is to reduce the cost by 10% by next year. And once you analyze each department or each product category, you understand that there are some underperforming categories are there. So you can sell that business, or you can close that business, maybe even if it is, maybe if it will save some amount for you. So the gap analysis is a technique used to determine what step need to be taken to move from current status to desired future. It identifies the missing pieces in resources, capabilities and market reach. Let's move into some case studies. The Coffee Bean Co. has a mission to provide ethically sourced coffee to urban professionals. Their 5-year strategic goals is to reach 10 million in annual sales. Currently, they are at 7.5 million. And their internal growth projection show they will reach 8.2 in 5 years. Now we identify a performance gap here. Your goal is to reach 10 and your projection show that you will reach at 8.2. So there is a 1.8 million gap is there. In this case, what you can do, you can decide, or you have to do a study how you can fill this 1.8 million. Maybe it's introduce a new product, or introduction or entry into a new market, or open your store in more location. It up to you. It's based on the case to case or business to business. Let's move into second case. TechFlow is a software firm. Their CEO issued a statement to be the primary provider of AI driven logistics software in North America by 2030. So this is a vision statement. You can see that it's a long term statement, and it's an aspirational and set long term direction rather than describing day to day operations. If it is something describing day to day operations, it is related to a mission statement. This is a long term statement or long term direction rather than describing day to day activities or day to day operation. So it's a vision statement. Let's move into multiple choice question practices. An organization has identified that its projected sales for next 3 years are 50 million. However, to satisfy its shareholders and meet long-term expansion goal, the organization requires sales of 65 million. The 15 million is the difference is best described as option A, strategic drift, option B, planning variance, option C, performance gap, and option D, operating leverage. So what is this? You have a objective to achieve 65 million, and you have to achieve 65 million. Right now you are at 50 million. So this gap, what you describe this gap, is a performance gap. So option C is the right answer here. Let's move to question number 2. Which of the following is a primary characteristics of a mission statement? It provides a specific timeline for achieving market dominance. Option B, it focuses on organization future aspiration, what it want to become. Option C, it defines the organization purpose, customers and current business focus. Option D, it lists the specific budgetary constraints for the upcoming fiscal year. So as a mission statement, it should define the organization purpose, customer and current business focus. The mission statement is focusing on current business. Once it's come to vision statement, it's a long term focus, it is a futuristic. Option C is the right answer here. You can see the explanation for both questions and answers. This is about today's discussion. If you have any doubt or you need any clarification on any of these topics, please ask me on the comment section. Thank you for watching this video.